welcome. My name is Matthias Knapp. I am here in Geneva at a JETFIN Agro conference, and my guest right now is Detlef Schoen. He is the CEO of Aquila Green Asset Management out of Hamburg. And Detlef, please give me like a 1-minute CV. How did you get started in agro? What's your history? What is your background?
My background is farming. I studied agriculture. I joined Cargill straight from university, so I ended up in the commodity trading business in Cargill, where I ended up, before I left, running the European grain business for Cargill. Then I set out in East Germany, set up my own micro Cargill, if you will, as a country merchant business, buying grain from the farmers, supplying input to farmers, financing farms on a comparatively large scale, which is the business that I sold after a number of years. And at the same time, I always had my own farm in the area, which I still have today, on which I'm running beef cattle and breeding some horses. And I bumped into Aquila after having done another stint in the international environment with Nadira in Rotterdam and Buenos Aires, where I was responsible for the global grain book. And when I met the Aquila people, the opportunity that attracted me was to go back to basics, go back to actually producing food rather than speculating with food, which is exactly what I'm doing today.
And what is the history of Aquila Capital, the company that you are now associated with?
Aquila Capital was founded in October 2001, which was a sort of an adventurous time to set up a financial company right after 9/11 as a alternative investment company, which in those days meant predominantly hedge funds. And so it was the aim was to introduce hedge funds to the German investor public. And this quickly developed into real tangible assets. So in 2006 we had the first series of funds investing in the carbon space and carbon credits. 2007 we had the first timber funds, and in 2008 we started in agriculture.
And Aquila Green Assets, what do you do there right now? What are some of your projects? What are some of the funds? How do you invest and create returns for your investors?
Well, Aquila Green Assets is the company which encompasses, everything that's to do with, if you will, photosynthesis. So that would mean agriculture predominantly, could also mean renewable resources, somewhere else, but predominantly agriculture. And it's an asset management company. So within Aquila, we have various groups of companies doing different things, from a structuring outfit in Luxembourg to all the various sales and structuring and issuing house functions. But Green Assets is the in-house asset manager. Right now, we are focusing on dairy farms in New Zealand. But in general, my role is to identify geographies, identify sectors in which to invest, come up with investable structures, and decide about the timing of entry and exit. So because of all these things, right now we firmly believe that from a risk-return point of view, the best value for money proposition in today's agricultural space is the dairy sector in low-cost geographies, and New Zealand being the least cost producer worldwide, we decided to invest in dairy farms in New Zealand. We also have already a small portfolio of farms in southern Australia, which is climatically very similar to New Zealand, and I do not exclude that we go back to Australia in the near future. I also do not exclude to invest in geographies where you have a similar climate and otherwise similar conditions to New Zealand, whether that is Latin America. Examples could be Chile, could be Uruguay, could also be parts of Brazil, or places around the Black Sea where you own land. I mean, the fact that we always need to own the land is very important. We are not interested in just producing food commodities on leased land, because then, in our view, the risk-return profile becomes heavily skewed towards the commodity risk side. So we always want to have a stabilizing factor in our return profile, which is generated by the land ownership and the fact that we can add value to the land. So that's basically the common denominator in our philosophy is We are farmers, so we buy farms, we improve the productivity of the farms, and we produce food commodities. Another very important thing in that context is that we are concentrating on pastoral farming, i.e. we heard today again about the scarcity of agricultural land. Well, we have about 1.5 billion hectares of arable land and about 3.5 billion hectares of pasture land, and still today we have cows and pigs and poultry and humans competing for the arable land, which in our view is not sustainable, which is why we are shifting towards the pastoral side of things, i.e. our milk, our meat is produced from grass and not from grains. So in that sense, our cows do not compete with humans, whereas, say, cows in Europe or in the US that are fed on a grain-heavy diet obviously are in direct competition also with humans for those calories. So that's basically already the common denominator: pastoral farming, least cost production, and always land ownership.
One last question, Detlef. What's your personal outlook for agriculture and your way of investing, and what is the targeted return that an investor could expect when he would be investing his funds, his assets through your structures?
First of all, I'm extremely positive about the general outlook for the agricultural sector. From a time when we were out raising money, sort of really trying hard to get people interested, the situation is completely reversed. We're getting cold calls from all sorts of people that are looking for investable vehicles in the agricultural space. The target returns in the products that we are looking after in the lower double-digit area. It is totally possible to have a 15% plus return if you're entering in a, let's say, in a special situation, distressed, opportunity, whatever. But I think in general you can say that from a cash return basis we target anything between 5 and 10%, on top of which you would have the capital gains. And the important thing about capital gains in this context is here I'm not talking about inflation type of capital gains, like everybody's reading the same headlines, so everybody's grabbing land and therefore land is getting more expensive. What I'm talking about is a farming approach, i.e. we're adding value to the farms we buy by increasing productivity. And a farm which is producing, let's say, 1,000 kilos of milk solid per hectare when we buy it, and when we sell it it's producing 1,300, is by definition worth about 30% more. And that's the sort of capital gain that I'm talking about, something which is self-engineered. If on top of that we have land price inflation, well, that's even better.